This week is setting up beautifully for the wheel strategy with some fantastic setups for cash secured puts and covered calls. Let me show you. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day today. Every single person that comments down below is going to get my new ebook called The Weekly Wheel, which shows you the best practices on running the wheel strategy on a weekly basis. So if you want that full ebook, just drop a comment down below in today's video. Hit that like button and that subscribe button, because today we are talking about the top setups that I'm personally paying attention to this week, specifically for the wheel strategy. So make sure you watch this whole video because we got a bunch of good ones. First thing we're going to do is do a quick little review of our public portfolio here. As you can see, we do have two positions here, primarily a cash secured put on Kraft Heinz that actually expires on September 26th. So the following, not next week, but the following week. So obviously that is the first one that we're going to be paying attention to real quick. Okay. I'm going to go through these quick since I talk about these often, right? Obviously we are below our strike price right now. This week, what am I going to be starting to do? Well, I'm about 2 weeks away from expiration here, right? A little bit less. I'm not panicking. I'm sticking to my plan, but I'm going to start looking on slightly greener days for a potential rolling situation, okay? That means I will roll out my cash secured put, most likely for the same strike price, but I will have to push out my expiration date. Now, I will only do this if I'm able to do a credit or if something fundamentally changes with this position where I really don't want to get assigned anymore. Either way, not panicking, managing this position, but you could see we are already at 26.15, at least at the pre-market at the time of me recording this video. Actually, if we refresh here, at the time of me recording this video, okay? So I'm obviously going to be paying attention to Kraft Heinz to manage that, okay? Management of the wheel, can't stress it enough, is very important. But I did have a nice little trade on this one. Not, it's a little 1.86% ROI collateral return on the trade log. If you do want the full trade log, guys, I updated it. It'll be fully dynamic. If you download it, just click File and make a copy, okay? Don't try to edit this one because I will not allow you to edit it. Otherwise, it's going to throw off all my stuff. But if you want this, first link in the description of today's video. It is yours, okay? Next one, obviously real quick, Snapchat. We have two positions here. Those aren't really due until October 3rd and October 10th. I have an $8 covered call and then a $7 cash secured put. And I've been just really having fun, guys. I saw a video yesterday on this. I'm having so much fun running the wheel strategy on Snapchat right now. The juiced up premiums, it's really at a good level, right? A support and resistance level around this 730. It's really fun. I'm having a real fun time with this. This is giving me like American airline vibes in a way. It's like when I first started running the wheel strategy, and that was primarily all I would be doing. Was when I was learning was like on this cheap stock. I don't know. I'm just having a lot of fun with Snapchat because it is a little bit more risky. Absolutely it is. But the juiced up returns, guys, let's get it. 3.76% ROI collateral return on that Snapchat put we opened up this past week. And then all on the covered call, a 2.31. Absolutely love to see it. Love to see it, especially with a small account for me. You know, I'm just having some fun here. So let's talk about some of the wheel strategy setups that we're going to be paying attention to. And again, for this trade log, click the first link in the description of today's video, okay? First one we are continuing to pay attention to is Target continuing to just fall off here, okay? Now, listen, when a stock is falling off and you already have cash secured puts in it, what I like to do is start thinking, Pete, what's my plan here? Do you still believe in this company? Do you still have high conviction in this company? Do you think this is a market overreaction? In the case of Target, I personally do believe. I do believe in in Target's business model. I do believe Target will recover and hit all-time highs. Again, I do believe that. So for me, I may jump into even more cash secured puts. I know that sounds absolutely bonkers. I have a couple positions here on this already. I'm going to start looking. If we continue to downtrend here, I'm going to start looking at 85s. I'm going to start looking at 80s again, or at 80s. I think this is a great opportunity for me, guys. For me, at least, I think this is a great opportunity with Target. Now trading well below the 200 and 300 day moving averages, right at that bottom Bollinger Band. Hella sold, oversold on the RSI 31. Man, and the premiums are very, very nice. I mean, they're not crazy nice. They're not like 3% ROI on collateral, right? Like, if I had to put my money on like long term, of course I'm betting Target over Snapchat. At least that's me personally. But I'm really paying attention here because it's just one of those situations, guys, where it's like, you either can get scared and run away, or you kind of can double down on a great stock that's getting beat up. And in my opinion, I think Target's just getting overblown. Just way too much for so I'm gonna most likely be looking for some more cash secured puts. Fantastic setup. Next one we are paying attention to is going to be UPS. Okay, look at the bands on this. Look how tight these have now at this point gotten, and this has just been trading really sideways below or right at that bottom Bollinger Band at this point. Still fairly oversold here. 37 on the RSI, that is oversold, but here's why I really like this, right? Look how far below the 2 and 300 MAs that we are, right? There's, at the end of the day, guys, the market, even though we've seen some pullback, we are on a tear, right? Like there's no ifs, ands, or buts about it. We aren't on a tear. So right now, I'm seeing opportunities in these kind of boring companies that not a lot of people are paying attention to. Like I'm sure you watch other YouTube channels and stuff like that, and I see all of them just talking about the same exact thing, right? Like selling cash secured puts on Nvidia, SoFi, like just the same name, AMD, like all the same names. Now, listen, you're taking tremendous risk on for other people when you're selling cash secured puts when on an uptrend of a stock when it's on its top Bollinger Band and riding that up, right? Like in my opinion, selling cash secured put on SoFi, even though I love SoFi, you guys know I love SoFi, right? For me, that is way too risky. If you get called, if you get a sign on a cash secured put at SoFi at these levels, you may be stuck holding that for years, and that is going to wipe out pretty much all your years worth of premium. So for me, I try to be patient. I am patient, and I look at stability, at least at this time where I'm at right now. You guys know I love running cash secured puts on Nvidia. When I first started this channel, right, that's all I was talking about. AMD puts, Nvidia puts, because we were on such a downtrend, right? And SoFi, right? Like that's where I was at. But now we're in a different season, guys, and that's the thing. As me as an investor, you got to just adapt to. You kind of follow the trend, right? It's like kind of like being like a water, just like following the wave, right? Where's everything, where are the setups available? Not trying to like just force something to happen with these, like, of course, great premium, great companies. But for me, again, you guys already know my number one rule is to make money, and it is. I not that I don't believe in like SoFi and Nvidia and all those will hit all-time highs again. I do. I'm bullish on them. But for me, I'm looking for opportunities, really good opportunities. And UPS, obviously, boring stock, but a great setup, well below 2 and 300 day moving average. For me, I believe that I'm setting myself up very well here with cash secured puts at the 80s for UPS. Okay, so I'm paying attention to that. Next one, let's get it. You already know how many times I talk about like the Cokes and Pepsis, guys. You already know this is like one of my favorite niches next to IT networking products. Now, this one is not that, it's not that fun, right? Like it is literally Coca-Cola, but Ark Options Strategy, guys, right? We're able to now have our or if we get assigned, we're able to be collecting a nice little dividend on top of our collected covered call premiums. Now, obviously, I'm looking at cash secured puts here primarily. I'm going to most likely be playing right at the money here, 67s, 66s, being a little bit more aggressive here because, again, I think this is a big overreaction on the market's part. This is a fantastic company, a great business model, and I'm just going to ride this thing down. So if this continues to trend down, I'll look at the 65s, right? Look at how oversold this thing is. 34 on the RSI here, which is absolutely bonkers. A great setup, especially in the market that we're in right now. Definitely paying attention to Coca-Cola this week as well. Next one that's getting just beat up, another crowd favorite, Starbucks, now trading actually below its bottom Bollinger Band, which is quite honestly insane. Now you'll see a lot of the stocks that I'm sharing with you, they're all kind of around the same price. So you're locking up around that, $6,000 to $8,000 in collateral. Now, and usually, when I'm looking at these, especially for strike prices, my number one rule, guys, as you know, no indicator, no delta, blah, 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 like all that to me doesn't matter. It's what is my ROI on collateral And then I look at my delta. But number one is ROI and collateral. Does it hit my goal? And then does the delta align with that? Am I being a little too aggressive? Am I chasing a little too much? For me, when a stock is getting hammered, like this Coke or a Starbucks, I don't mind playing closer to the money. I don't mind being at deltas at like 35, 40, right? Because for me, even at these levels, I like them, even if I was going to buy them. So I saw this, some of you talking about in our Facebook group. It's free. Join us free in the, down below in the description. We'll leave a link for our Facebook group. But some of you were like, well, you know what? Like, if it's in such a downtrend like this, like, what do we do? Like, what's like the ideal situation? Well, there's only a few situations, right? And some of you get caught in bad situations because you're selling cash secured puts on an uptrend when everybody's excited and just collecting premiums. Yeah, of course, right? When uptrends happen, but look at how many people got hurt during those times as well, right? So for me, I will look at more under stuff that's at the bottom Bollinger Band that's already on my watch list that I've shown you guys plenty of times on this channel on how to actually do. A couple other that I'm paying attention to. I'm already prepping my portfolio for the next moves, guys. Okay, so you already know here I have a couple positions here. I have some stuff that I'm going to be getting back here, hopefully some money back with the puts and stuff like that, or sales of Snapchat and stuff. And I do have a little bit of money in here still that I can get into some stuff, but I'm going to be paying attention to heavily for General Mills is one of them as it comes back down off its bottom Bollinger Band, as well as Hormel Foods. I'm going to be paying attention to Hormel Foods a good amount. Also, falling knife, fell off a cliff. I think a classic market reaction here. So I'm watching that. Premiums aren't really that juicy yet on this, to be honest with you. So I'm just paying attention, or just waiting and paying attention. And then also Colgate. You guys already know I love these consumer staple brands where all of us have like hundreds of products. What I'm paying attention to here is the dip under the 300-day moving average. I want to see this dip under its 300-day moving averages and see what kind of support and resistance we get from there. Guys, I want to tell you guys about weekly wheel picks. Okay, this is a brand new newsletter that I literally just launched internally for a very small group of beta members that I'm opening up today. We had a huge turnout of people yesterday. We only opened it up for 5 yesterday, but I woke up and I had a bunch of emails. So I'm going to open it up for a few more people today. Okay, so this is basically going to be a weekly wheel picks newsletter where I send you an email with all the top picks every single Sunday night by 8 p.m. Eastern time, right? These are all going to be research, strike prices, expirations, what I'm watching, what is the context, right? Because this isn't about you just copying trades. This is for you to be able to learn the thought processes so you can go do your research for yourself, and better yet, teach somebody else, because I do believe we should all be telling as many people as humanly possible about this strategy. And then, of course, risk focus breakdown, and all focus on the Ark Options Strategy. So we are opening up beta access to this at the current price that it is. The first newsletter is going out tonight, and it'll be going out every single Sunday night before 8 p.m. Eastern time. So if you want to be part of this beta and lock in this beta pricing for life, click down below in the description of today's video. You'll be able to sign up for our weekly wheel picks, guys, at this current pricing, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.